Yo, yo, what's going on? Can you hear me? Can you see me? Can y'all hear me? Can y'all see me? We about to get into it. What's going on? What's going on? How you doing? I'm gonna take your
Oh,
there you go. How you
yeah.
feeling tonight?
I'm doing good. Doing good.
All right, cool, cool, cool. What I'm gonna do is I'm gonna share my screen and we're gonna get into it. We're gonna go into candlesticks and we're gonna get into a few of the patterns and different candlestick patterns that I like to trade. So we're gonna go on and get into it. I'm gonna take your video off though for right now. So boom, I'm about to share my screen as well and we're gonna get into it. Let me get everything together real quick. Hold up. Where's all my files and stuff? One second. Bear with me, bear with me. Hey, here we go. Okay, okay. So now we getting it. All right, now I'm ready to share the screen. Sorry about that. So here we go. So right now we're gonna get into mastering candlesticks. So what you're gonna be learning today is pattern recognition. We're gonna teach you to master the art of identifying bullish and bearish candlesticks. So what bullish means is that you plan to expect to go up. What bearish means you expect for it to go down. So we're gonna show you how to recognize when stocks are gonna go up and when they're gonna go down. We also gonna discuss market psychology. So that's understanding what a candle reveals, like what's the emotional battle between the buyers and the sellers. So all the candlestick is pretty much is showing you when the buyers are buying the stocks and when the sellers are buying, you can buy a stock betting that it's gonna go down. So that's called shorting. So you can bet that it's gonna go up or you can bet that it's gonna go down. And depending on who buys the most stocks is who's gonna win. So if I'm buying a bunch of stocks that is gonna go down, you buying a bunch of stocks that is gonna go down, um, what's gonna happen is somebody's got to win. So that's going to either make the stocks keep going up and forming new candles, um, or it's going to make it go down and form new candles. So we also going to identify high probability setups. So all stock trading is just pretty much it's not gambling. It's a elevated gambling, a more educated gambling. So we actually can spot and identify high probability setups that enables us to get in and make money off of. So if I could see a signal that this is going to go higher, I could get in, catch it while it's low, sell it while it's high. So we buying and we selling. And we're gonna show you how to get strategic entry points. So entry is everything. You got to get the right price so you can make the right money. If you buy too high, you might have missed the move. You're not gonna make that much money. It could reverse on you. You could lose money. So we're gonna go over that. So what is a candlestick? Each candlestick is a visual snapshot of price movement over a specific time frame, whether it's 1 minute, 5 minutes, 1 hour, or one day. So think of candles as the market's heartbeat monitor. See how this looks like a heartbeat monitor, how it's going up? Whoops. So think of that as a heartbeat monitor showing you the intensity and the direction of trading activity in real time. So pretty much green candles mean the buyers are in control. So that means it's gonna go up. Um, Let me see. Cool. So yeah, so that means it's gonna go up. If you see a red candle, that's gonna go down. So as you can see on this example right here, we got red candles. The sellers got control, it's going down. Buyers got control, it's going up. And pretty much the market moves, it doesn't just go straight up. So the stock market is never just going to be a straight line that just goes pew up. It don't work like that. It's always going to be up, down, up, down, up, down. And the reason being is because stock market is about buying at a certain level. So these are the type of levels. Can you see my cursor right here? That's going over the stock. So
Yeah, I
these are
see.
the levels that you want to buy at. These are the type of areas you want to buy at. See how, can you see my cursor? This is making a V. So that's making a V, that's making a V. So you want to buy where these V's are at, pretty much. Everywhere where the V's are at is where you want to buy. So these are buy zones right here. So pretty much, um, you want to get in around here and say the reason why stocks go up and they go down is because, so say we see this, if you see something like this and you see this wick and you get in, say you buy your contracts down here, if you can see my cursor. So you buy your contracts down here, when they get up here, or if they get up here, you're gonna be ready to sell now because now you done made some money. So once it get up here, you start selling. But the only thing is you're not the only person that's selling. You got hundreds and thousands of people that's right there who bought it down here when you bought it. So now they riding it up. They money going up. They money going up. Now once they get up here, it start looking a little shaky. It ain't going up like there. It ain't just keeping going up no more. So now that's just sign to get out. So once you see, okay, it ain't keeping going up no more. What's up with that? All right, I'm gonna get out. But you ain't the only person thinking like that. It's other people thinking like that. So everybody's getting out at the same time. So now the stock's going down now. So that's why stocks are always going to go up and they're going to go down because the people who bought it for the low, once they get to the high, they're going to start selling. Once you start selling, that makes the stock go down. So now everybody's selling, making their money. And then if you can see my cursor, everybody up here is selling, they getting out of there with their profits. The people who stuck, who didn't sell, now they stuck in this shit. So now they panicking. Oh shit, I ain't sell, it's going down. Now you see these big red candles now because they trying to get out bad, panicking. Everybody sell, 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 sell. So that's why stocks go up and down. So stocks always gonna go up and down, and that's why because people are buying and they selling to get their money, to get their bag. So with the it's critical points in a stock candle. You got the open, you got the close, and those are the most critical. Then you got the high and you got the peak. So that looks something like this. So that would look something like this. You got so this will be your body. This square part is the most important part. That's your body of the candle. Right here is the wick. So how a candle works is it starts off like this. So this is like even playing field. The sellers is up here. The buyers, whoops, dang. All right, one second. All right, here we go. So if you can see my screen where my cursor is at, this is how a candle starts. So every time a candle starts, it's essentially starting like even. And then the sellers start from the top. So they start from the top and they work their way down. The buyers start from the bottom and they work their way up. So and whoever gets the most sales, so say these sellers, they start from up here and they work it all the way down to here. They kind of got control because they pushed it all the way down. And this is where the body closed at. So at the 5 minute candle, at the end of 5 minutes, if we're on a 5 minute chart, this will be the final product. So this will be looking like this up here. That would look like these are the final products, but this is each candle. So each candle has a purpose. So when I want you to understand that it's a battle. Each candle is a battle. So if we're looking at a 5 minute chart, this is a 5 minute battle. So at the end of 5 minutes, you're gonna get the final candle of what came out of who won the battle. So say 5 minutes went by and we got this candle. If you can see my cursor right here, we got this candle. That means the Bulls, the green team, they won. They started from here. They was able to push it all the way up and get it to close up. So where it closes at the end of 5 minutes, that's gonna be the final candle. So say the 5 minutes ended, and this is what was left. So that means the Bulls won because they pushed it all the way up and they kept it up. When it closed, it was up on their side. So each candle, you pretty much trying to either go high or you trying to go low. If the Bulls get it high, then they won. If the Bears, which is betting that it's gonna go down, If they pushed it down, then it's gonna look something like this. That means they won. They was able to push it down and get it to close down. You feel what I'm saying? So that means at the end of 5 minutes, this was the final product, which means they won. They closed it down low. If they get something like this means that the sellers is in full control. So that means they bought all the shares up. The green team ain't really buy much. They ain't really put up nothing. So they just got swept. All the sellers bought all the contracts and just basically they won this round by a landslide because it's full. So what I'm gonna do is I'm gonna give the if I can get out of this, I'm gonna give the floor. Hold on. I'm gonna get a floor to my boy Ari, and he gonna explain this to you.
These candlesticks you're looking at represent a certain time period. So whether we're on the 5 minute chart, every candlestick you see, if we're on the 5 minute chart, will be 5 minutes. We're on the 15 minute chart. Every candlestick you see will be 15 minutes, right? So we will be looking at some live candlesticks as well, right? So we're going to be going over what makes a candlestick red or green. So what makes this candlestick green? Let's talk about it. Let's pretend like we're on the 5 minute chart. So if we're on a 5 minute, within 5 minutes, let's just say it opened here at $10, then it went to $7 as a low, right? Then it went to $15, but then it closed at 12, correct? So in order for something to be green, right, the close must be higher than the opening price, right? And the relationship between your open and your close is called your real body, right? And then for a red candlestick, it's the complete opposite. Let's just say it opened here at 12 when it's high as 15, right? And then went as low as 7, but closed at 10. Same prices, right? That makes it a red candlestick because the close is lower than the opening price. So if we're on a 5 minute chart, you see that when it opens somewhere and it closes higher than the open, right? It will be a green candlestick and the body will be green. And vice versa for the red candlestick. If it closes below the open, right? The body will be red, right? So let's keep going. And outside of the real body are called your shadows or wicks.
Wicks.
Now, these are big green and big red candlesticks. Big green candlesticks represent strong buying pressure, and big red candlesticks represent strong selling pressure. So looking at this, I can tell that it opened here when as low as here, when as high as this point, but closed here. So for the red candle, for the big red candlestick, right? I can tell that it opened here when as high as here, when as low as here, but closed here to make it red. So by looking at these, I can already tell the relationship between the open, close, high, low, and real body. So let's go over what a doji candlestick represents. Dojis represent when the open and close are virtually the same. So with
All right, so shout out. That was my boy Ari giving y'all that. So what I want to get into is what he was getting into candlesticks. There's certain candlesticks. Now there's a bunch of candlesticks. There's all type of this candlestick, that candlestick. We're gonna get into the main candlesticks that matter. And these right here are the main candlesticks that matter. So what I would invite y'all to do is take a screenshot of this right now. Take a screenshot of it. So this is going to be your guide. This is what I have, on my side at my workstation while I'm trading my stocks because this is what you're going to be looking for. We're looking for a certain criteria and they tell a story. So like I was saying with the middle, if this is an indecisive candle. So if you see a candle like this, that means neither side won. So it's a tie. So that's not really telling you. When you're looking for stocks, these are going to be your strongest candles. This means that they were in full control. They bought all the stocks up. That means the price started here and they drove it all the way up and they got it to close here. So they got it to start here. They got it to end here. At the end of 5 minutes, it was all the way up here from way down here. Same thing with this one. But it's a certain time when this is the strongest. So with stocks, you're always looking for them to hit key levels. So a key level will be like an even number. So say a stock is $670, that's an even number, 670. Say it's 675, that's considered like an even half number. So stock market runs off of half numbers and whole numbers. So you wouldn't go buying a stock at 672.50. Put me in at 672.56. You wouldn't tell your broker that. You would either tell your broker, if it gets down to 670, get me in. Or if it gets to 675, get me in. If it gets to 680, get me in. Sometimes, and what I notice about stocks is sometimes they go in $2 increments from the main number. So if the main number that we're looking at is 670, you're going to start to expect activity at 668. So $2 before our main number is when you can start watching for activity. So it's usually like a $2 window. It's like a $2 window gap, like area where you can watch for activity. But the main thing about this candle and what I'm getting at is say it's coming down to 670. So what we look for is things called bounces. So if a stock is at 680, everybody's gonna sell. You know, if they bought it at 670 and say the stock went up to 680, they just made $10 off of every stock they bought. Off of every contract that they had, they made, XYZ amount of dollars. So they're gonna be looking to sell, and take that profit, cash in on their bag. So what's going to happen is when it was breaking 670, there was a bunch of people who was trying to get in, and some of them missed the trade. So a lot of people missed the trade. Some people got in and they rolled it all the way to 680. They made money, $10 move. They happy. But it's some people who sitting at that 670 who order never got filled. So now they're just sitting around waiting for it to come back. So what's going to happen is all those people who got in the first time, they're going to sell. That's going to bring the price down. It's going to bring the price back down to where it started at, which is 670. So all those people who were waiting for that to get in the first time who missed it, they're going to buy it this time. So now the stock is going to actually bounce up. So how do you know if it's bouncing up? Because you'll start to see this candle right here, which is the second most bullish. So that means that they were pulling it down, pushing it down, pushing it down. Everybody was selling, everybody was selling. Then all of a sudden, boom, the buyers came in and they created this wick. This wick is all buying. That's like a rejection. So think of these wicks as Mutombo. So that means they was trying to push it down, and Mutombo came and swatted it back up, and then it ended up closing up here. Once you see that, if the next candle comes in like higher than this box right here, if it comes in higher than this part right here, the lower of the body, if it come in like right here, and the next body, like the low body starts here, boom, it's going up. And that's like normally how it works. So let me break it down. So with this, you got continuation candles, which are strong bodies with small wicks that show conviction. So if you see something like this would be called a continuation candle. And it's going to show you that it plans to go high. The sellers didn't stand a chance over here. They ain't even come in. They ain't registered. They ain't got no wick. They ain't make no noise whatsoever. So the bulls got this. So that means it's probably most likely going to go higher. So that's called a continuation candle. Then we got indecision candle. So that means they don't know if they want to go higher or they don't want to go lower. We don't trade these. The only candles that we really trade in is continuation candles and reversal candles. Those are the only candles that matter. If you see this is just noise in the market. So not every candle is just gonna be pumping and going all high. Sometimes nobody wins the battle. The bulls don't win, the bears don't win. So when that happens, you get one of these candles, which is just a neutral candle. So it's probably not gonna go up. It's probably not gonna go lower. It's probably just gonna keep going like this. With stocks, you want them to like go higher, like Legos, like cinch up and go higher. if it's just going sideways, we can't trade that because we trade moves that break and go higher, or we trade moves that break and go lower. So when these indecisive candles are coming, those are the candles that just come sideways, 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 sideways. We don't want to trade that at all. We want to trade up, 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 because that's where you make money when stuff is going up or stuff is going down. So that's indecisive candles. We don't trade those. Those just take up time. Then we look for reversal candles. So these are what I was talking about. Like if a stock is plummeting down, nothing but these. See these, see this come, and then another one come here, then another one come here, and it's just nothing but these red ones. You see where my cursor at? So nothing but these red ones right here. Just one, then another one lower, then another one lower. If you see that, that means that shit is tanking. That means that shit is like selling and just tanking. So boom, if all of a sudden now this come, that means that the buyers started here and they bought it all the way back up. So that means it ain't tanking no more. Y'all don't got full control no more. Y'all ain't coming out with these type of candles that's just full throttle no more. Now something happened now. A change has happened. And these people stepped in and they pushed it. So it was looking like this. It was looking like this, but the bulls stepped in and they fought all the way back up to make this candle only look like this. So once you see that, they pretty much got control. It's like, okay, they stepped in. They about action now. They done rallied up. They ready to turn shit around. So that's called a reversal candle. And that's a distinctive pattern with extreme wick. So the longer the wick, that's the more of a chance of it reversing. These form on one side makes a push, but gets completely rejected, shifting momentum to the opposite force. So they was coming down like this, and they thought they had control. Then Matumbo came and swatted their ass. Boom, and then that shit shot back up there. So that's called a reversal candle. So that's what we trade. So what I'm giving you guys, it's not the master. I'm not telling you guys the master stocks. I'm not telling you guys, I'm not the big master of stocks. As a regular person, I'm going to show you how you can make money, thousands in the stock market. You can either take it over as your main job or it could be a side addition to what you already got going on. But I'm not going to teach here and teach, oh, sit here like I'm teaching you all these strategies. I'm not teaching you a bunch of strategies. I'm going to teach you, I only trade with three strategies, which is the bounce strategy, the reject strategy, and the break and hold strategy. So three strategies. There's hundreds of strategies out there. I don't specialize in those. I specialize in three strategies, and that's all you really need to make money. So what you need to do is find the edge in the market. So that's a strategy that's consistently going to make you money every day in the market. So what for me, my strategy is called the hammer strategy. So this is what the hammer strategy is called. It's a reversal signal at a support. So when we come into stocks, when we come into the stock market, let me pull up, let me pull up my charts. So when we come into the stock market, can you see my stock chart?
Yes.
Okay, so when we come into the stock market, um, we come in and we looking for certain criteria. So let me pull up an empty chart that I don't normally trade. Let's just go with Google. Google. All right, cool. So this will be Google right here. So pretty much when you start in your day, let me clear this chart. And so I'm gonna show pretty much it's a simple thing, and you're gonna learn it over time. We're gonna do different segments that we're gonna teach you how to chart. We're gonna teach you how to do different things. But for tonight's session, it's just about candlesticks and getting you familiar with what candlesticks are, what purpose they serve, and how to read them. And then we're gonna do stuff like price action courses and different stuff like that. So this is just a brief introduction to get you into motion, but on a more in a more advanced section, this is what charting is. When you step into the market, you want to chart key levels, and then pretty much you just looking for that hammer candle that we spoke about to at these key levels. So how do you find key levels? The market is all about V's. A V is this right here. See how this makes a V? That's making a V. See how this kind of makes like a V? That see how this is making like a V right here. So what I'm gonna do and what I suggest, and what they have tools right here. See this right here is saying drawing set. So you have tools that you can use. You can make like a line across. You can do like different stuff. So what you're looking for is the most V's. You want to see the most V's in one area, and those are called touches. So you want to see the most touches in one area of these V's. So right here, I see one V, two V, three V. What you need two or more V's to make a level. So so this right here is 200. So if you can see right here, this is 200 level right here. And see how I'm about to make a line here. So I want you to see what's going on. So this is what you would do. This is called charting. So this is one of the most important parts of stock market. Once you learn how to chart, then you know what areas to expect movement at. So then you can set an alarm, set an alert that goes off on your phone or on your computer. It'll tell you beep, 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 beep. It's getting close to your level. So right here, I chose 200 as one of my levels because the reason I chose 200 because we're looking for V's. So see this right here. I'm about to zoom in. See how this, I'm gonna make it real simple for you. This is what I like to do. This is called a trend line. And what you can do is you can actually draw a V over these areas and it's gonna actually point to the area that you should be looking at. So for all my beginners, I like to do this so that way you're not missing any V's at all because a V is what you're looking for. Your V is what you're looking for. This is actually exactly what we're looking for right here. The whole market is just looking for this candle, and you want to see the next candle, the bottom of this next candle. So this is the bottom. Can you see my cursor? This is the bottom of the next candle. So that means when this candle first started, so these are daily candles right now. I'm on a daily chart, but normally we'll be on a 5 minute chart. So what the daily means is this represents one day in the stock market. This one candle. This one candle represents one day in the stock market. But what we do is we trade off the 5 minute candle. So let's pretend this is the 5 minute candle just for the sake of my example to try to simplify this. So here we go right here. So this is called a hammer candle and this is 185. This is actually a level. See how this V pointing to this right here? This V that I created is pointing right to a level 185 because remember I said it's actually 186, but that's cool. So see how this points? It's gonna point when you go through and you identify all these V's, it's gonna point to you to the level that you should be looking at. So this pointing to this 200. This is pointing to this 200. This right here is pointing to this 200. If you see one or two or three of these V's pointing to one section to one number, then that number becomes you will put a horizontal line across and it's going to point to you at the number that you should be looking at. So we looking for even numbers, even or half numbers. So 200 is an even number. See this 200? That's an even number. 200 is an even number and it has three touches on it. One, two, three. So two touches or more equals a line. You're allowed to put a line there. Okay? So there's a horizontal line on a drawing set right here. You get a drawing set that you could do little tools and stuff with, and it's right here in the bottom corner. So you can go through and you could get what's called a horizontal line and you select it. So what we do is we're looking on the chart for the area with the most touches of a V. So see how this is a touch. This is technically a touch. Even though this V isn't really on this line right here, it's pointing to it. So that's a touch. This one right here is on that line. That line is touching it. So that's another touch. So two or more touches enables you to put a line, to put a horizontal line there. If you look and it's 2 or 3 touches, and you happen to look and it's at an even number, then that's a strong level. That's a strong line right there because it's at 200. So more people will call their broker and say, yo, if this stock get in at 200, and it's gonna end in 10 minutes, but if this stock get in at 200, get me in. So pretty much we just looking for levels like that. So now, and this is a perfect example. So now this is our level around 200. The reason it's our level because we've seen two or more touches at that same level. It's actually more. So what I do is I go and you'll have a toolbox down here. You can go to this and it's called a trend line. And you can click it and you can make little V's with the trend line. And this is going to point out for you exactly the level that you should be looking at. It's pointing to the level. So see how these right here, they're all pointing to the certain level. See how they all pointing? They pointing to these levels right here. 189. So you put a line where it touches that. So when you put in these lines, you're trying to find the end of where they're at. So the end of it, around the end of these tips, you want to like kind of put your line. So like 190, that's an even number. So it's 3 touches. I seen it's 3 touches. So I put a line here at the three where the 3 touches meet. That line just so happens to be 190. 190 is an even number. It ain't 193, it ain't 192.50, it's 190, an even number. So we looking for numbers of either 190 or 195. That's a whole number is 190, the half a number is 195. So we looking for those type of numbers. So we looking for all areas that point to one section, to one number. And if that number is even, then it's a good number. So right now we got 200 and we got 190. Those are proven numbers that when it got to those levels, it always bounced back up. Got the 190, bounced back up. Got the 200, bounced back down. Got the 200, bounced back down. You see how that works? So now that's a trusted level. So what we did is we went back in time. So the current time is right here. This is our day. This is like present day, October right here. See my cursor? What I did is I went back. You could go back different months. So these months that I went back where I made these V's, can you see my cursor? That's all the way back in December of in February. So what we doing is we using old data to tell us what's going to happen in the future. So I know, all right, at this level, 200 was strong. It tried to tap through there 2 times and it never broke through. It never made it through. So this is a rejection. So remember what the wick is? The wick is Matumbo. So the wick is Matumbo. That means it rejected down. So that means the stock was pushing up. These is pushing up. So the green is pushing up. That's a good candle. It's making it, it means it's gonna go higher. Then you see this candle, that means it's gonna go higher. You see this candle, it's green, it's still going. You see this candle, it's still going up. So everything's going up. But what happened? Once it got to 200, all of a sudden it stopped going up. All of a sudden, Matumbo came through with this long wick and swatted it down. So then what happened? Matumbo came, and this is the wick right here. So when I say Matumbo, they tried to push through. So that means they was the buyers. It starts from the bottom. So it starts from right here. So when this candle started, the buyers is right here. And they pushed it all the way over 200. They had it. They was about to go to the next level. But then Matumbo came through and swatted them back down. So he swatted them back down. That just messed their whole confidence up. And then the sellers took control from that point. Once they swatted them down, now the sellers got control. So now it's coming in red because the sellers is starting right here and they pushed it all the way down. But the buyers pushed it up here, but it ended red. So that means that the sellers won. Then the very next candle came in and it was red again. So that means the sellers won again. Then it came another candle. The sellers was trying to win, but what happened? Matumbo came through. This is a swat. So they try to push it below 186 right here. They try to push it below this level to get lower. Matumbo came through, swatted it back up. We not going lower. So how do you swat it back up? That means the buyers came through and bought way more shares than the sellers. So the seller, so this is the buyers buying. They pushed it all the way back up. They took control. The next candle was green. But this is the sauce right here. So you want to look for them to come to a certain level and you want to see this rejection. You were looking for them to tumble. That's your sign. So if it's at an even number, like right now it's at 186, we already seen that 186 is a strong level. We already seen that if it comes down to 186, the buyers are going to step in and they're going to hit it with the Matumbo and they're going to swat it back up. We already know this. We looking back at December. We looking all the way back at December. So we know these levels right here, if it comes down to these levels, it's going to get swatted back up. So that's what we pretty much know. So now we look in the past, we mark these levels from the past. So now we got our levels from the past. So now here's the future. Can you see my cursor? So now we in the future, and what's happening? The stock is trying to break that level again. So will it swap back down like it did in the past, or will they get enough strength to break over? So they tried to the first time and they got swatted back down. Then they got swatted down. Then they came back up, tried to regroup again, got swatted back. I'm gonna zoom in a little bit so you can see. Hold on. I don't want you to lose it. They tried right here to get through this 200 level again, got swatted down. Then they built up enough stocks again to buy, got swatted down. Then they tried to do it again, got swatted down. Usually around the fourth swat down is when they finally break the level. So you might get swatted down like 3 times. Around that fourth time, they probably might break through. That fourth or fifth time, they probably gonna break through. So boom, here we go. Like the fifth time, they try to push through. They were strong though. The next time they actually got it to close above the level. So once it closed, this is the full body close. They actually got the body of the candle to close above. So just getting over this level means nothing. Just having a wick over this level means nothing. It's not official until part of the body is over this level. So once the body got over the level, that's a sign that it's strong, but you really don't want it to be half a body over the level. This is when you know it's strong, when the bottom of the candle is at the bottom of the level. So that means it basically cleared that level. The bottom of it, the bottom of this candle kind of cleared that level. So you could get in right here and you could ride it all the way up to here, and then you could sell. And that's what they did. They rode it to here. Then you see the Matumbo came in because they started selling. And then what happened? It rejected down. So essentially, every time you see these long wicks, if the next candle comes in lower than this body, so if the bottom of this comes in lower than the bottom of the body of this, you could pretty much expect for it to go down. And then you just ride it down until you see this wick forming, because we know that Matumbo means that it's gonna turn around, right? So you ride, so you get in here, the candle comes in lower, so you get in. You ride it all the way down till you start seeing this wick. You once you start seeing this wick, you like, I'm gonna just go ahead and sell all my shit. I done made my money. Now you sell it. Now look what happens. The next candle, see how this body comes in higher than this body? See how this red body right here, the bottom of it comes in higher than the bottom of this one. See this body right here? The bottom of it, see the body right here comes in higher than the body of this one. When you see that, that's a buy signal. So that means buy. So as soon as you see, it'll be like this, the next candle will come in. As soon as you see that this bottom is higher than this, just hit the buy button. As soon as you hit the buy button, boom, you just gotta wait now. 5 minutes go by, now you get this. 5 minutes go by, now you get this. You still in the trade. Now you can either sell up here if you want, or you can hold longer. You can sell a few, then you can go longer. So it's about to cut off though, but that's the introduction though. And I'm gonna send you an ebook, the candlesticks, but that's pretty much what the candlesticks are. And I'm gonna send you this so you can see. It's probably gonna cut off, but that's pretty much what I wanted to explain to you. And these are the type of that's called a hammer reclaim. So see how this comes in higher? And you can screenshot this too. These are the different type of continuation setups. I'm gonna send this to you on your email. And pretty much this is it. So these are some of the patterns, screenshot it, and that's pretty much is what a candlestick is and what we look for a candlestick. Next segment, we're gonna go into